She made the final payment on the boat. The bank would not tell her whether the loan was closed. Privacy law barred the lender from discussing a loan that had never carried her name. The debt was settled. The lien stayed on the record. A lien attaches to the hull, not to the borrower, so she could not sell. Federal rules require the lender to record the release. Nothing made it. A maritime attorney told her the only route left was to sue the bank and ask a court to order the Coast Guard to remove it. And the certificate she renewed every year does not list liens at all. Have you ever paid something off and never gone back to check whether the paperwork caught up? Put it in the comments. This is what Yachts and Boats covers. Subscribe so you don't miss what's next. Her deal was strange from the start, and the strangeness is the whole reason it ended in a courtroom. She bought the boat from a private seller who still owed money on it. Instead of getting her own loan, she took over his payments. The deal was written as a charter. The title stayed in the seller's name. She paid monthly rent into a bank account set up for that purpose, and the seller signed a bill of sale for her to hold until the loan was gone. Every month, the money moved. Every month, the balance dropped. Arrangements like hers exist for one reason. A buyer who cannot qualify for a boat loan of their own finds a seller willing to leave the title in his name and take payments instead. Sometimes the motive is a credit score. Sometimes it is a marina slip the seller does not want to lose, or a use tax nobody wants to pay this year. The maritime attorney who reviewed her case was blunt about the structure. Every boat loan carries a clause in the fine print that puts the loan in default the moment title moves without the lender's consent. So the title stays put, the buyer pays a stranger's debt, and the lender is never told that the person sending the money has changed. Then the balance hit zero, and the seller disappeared from her life, which is exactly what both of them had planned. That is when she learned what a satisfaction of mortgage is. Paying off a vessel loan does not remove the mortgage from the federal record. Somebody has to file a document that says the debt is discharged. That somebody is the lender. Until the lender files it, the record keeps saying the money is owed, and the record is what a buyer's bank reads. When the lender exists and cooperates, that filing clears in 2 to 4 weeks. Hers did not file at all. She could not make them. Consumer privacy law stopped the bank from discussing a loan account that had never carried her name, and the only person who could authorize that conversation had sold his boat and moved on. For a federally documented vessel, none of this happens at your state office. It happens at the National Vessel Documentation Center in Falling Waters, West Virginia. That is where preferred ship mortgages are recorded, where satisfactions are filed, and where the ownership history of a documented boat actually lives. There is one more piece, and it is the piece that turns a delay into a trap. Federal law bars a state from issuing a title on a documented vessel. The Coast Guard does not treat a state title as valid for those boats. So when the federal record is wrong, there is no second document sitting behind it. There is no backup. There is one record, held in one office, and it said she owed money she had already paid. Her paperwork was in order. The one document that would have shown her the problem was a document she had never ordered. Most owners have never ordered it either. The certificate of documentation is the paper in the drawer. It is the one you renew. It is the one with your boat's name and official number printed across it, the one you show at the dock, the one that feels like the deed to the thing you own. It does not show liens, not hers, not anyone's. A certificate of documentation reveals nothing about mortgages, claims, or encumbrances, because that is not what it is for. It certifies that the vessel is documented. It says nothing about who has a financial claim on it. The document that shows liens is called an abstract of title. It lists the full chain of ownership, every mortgage ever recorded, every satisfaction, every notice of claim. It is a separate order, a separate fee, and it comes back in 2 to 3 business days. Read one, and you are looking at the vessel's financial biography. Who owned it? Who lent against it? Which of those debts were formally discharged and which ones were simply stopped being paid? Documentation services tell buyers to pull an abstract before any sale or transfer because it is the only way to see what a certificate hides. 2 to 3 business days. That is the entire gap. At any point across the years she owned that boat, a request and a small fee would have put the problem in her hands with time to fix it. Nobody told her the document existed. Nothing on her certificate suggested there was a second one. This is the part that makes no sense to me. We built a system with 2 records, gave every owner the one that carries no information, and then made the informative one optional. That number does not fit the story most people know. Which surprises you more, that the fix takes 3 days, or that almost nobody knows to ask for it? Once she knew what she was looking at, she started chasing the signature. The first move is to find out whether the original lender still exists in some form. Banks get acquired. When a successor institution absorbs the assets and the liabilities of the bank that made your loan, that successor is the party with authority to sign the release. So the search begins there. What the successor's records department wants is specific, and it is the kind of specific that ages badly. The name on the account at the time of the loan, the approximate year, the details of the boat, the branch where the paperwork was signed. She had none of it, because none of it had ever been hers. If the bank did not survive at all, there is a federal path. When a bank fails and goes into receivership, the FDIC will help obtain a lien release. For a boat classified as an ocean vessel, the FDIC wants a title report from the United States Coast Guard and proof the loan was paid in full. That proof means a promissory note stamped paid, or a copy of the payoff check, or something equivalent. The FDIC states plainly that it will not accept a copy of your credit report as evidence. Think about what that requires. To prove you no longer owe money, you must produce the paper the lender gave you at the moment you stopped owing it. If that lender never gave you one, the proof does not exist. Then there was the calendar, and the calendar was worse than the banks. From February 14th to April 30th of 2026, a partial federal shutdown halted Coast Guard vessel documentation services. Certificates were not issued. Renewals were not processed. New submissions sat. The National Vessel Documentation Center began working through the backlog only after the 30th of April. For 75 days, the office that holds the only copy of your ownership record was not touching it. So what was left for her? The attorney's answer was a lawsuit. Not a suit for money. A suit for declaratory relief, which means she would ask a court to issue an order to the Coast Guard directing it to remove the mortgage lien. To win it, she would have to prove she had an interest in the boat at all, using her charter agreement, her bill of sale, and her evidence that the payments came from her. She would have to go to court to prove she did not owe money she had already paid. And the law was on her side the whole time, which is the part that stings. When a preferred mortgage is settled on a documented vessel, the mortgagee is required to record a release in a timely manner. Failure to do so can create liability to the owner for any damages that follow. An attorney answering a similar question on a public legal forum added the sharpest version of it. If your buyer walks away because you cannot deliver good title, that loss gets added to what the bank owes you. A rule existed. A remedy existed. Neither one did anything until she paid a lawyer to go and collect them. Her case is where the paper trail stops. The column that described it never published what happened next, which leaves the question that has been sitting underneath this entire story. For all those years, who was supposed to be checking? The answer is the bank. While the loan was alive, the lender monitored that record continuously. It confirmed the mortgage was properly filed. It watched the documentation status because a lapsed certificate weakens the mortgage. It required insurance, and it required proof of that insurance every single year. None of that was for her. It was for the collateral. She was covered by accident, in the way a man standing next to somebody with an umbrella stays dry. The day the loan closed, the umbrella left. Watch what goes with it. The lender required hull coverage as a condition of the loan, and that requirement dies when the loan does. Most states do not require recreational boat insurance at all. What is left is contractual. Florida marinas commonly write $300,000 to $500,000 of liability into a slip agreement. Marinas on the South Carolina lakes ask for $100,000 to $300,000. Dense coastal markets ask for $1 million or more. The marina becomes the enforcement arm, and only for as long as you keep the slip. Then there is the reminder, and this one is new. As of 2026, the United States Coast Guard no longer mails Certificate of Documentation renewal notices. Owners are expected to track their own expiration date and renew through the online portal. The date is printed in the lower left corner of the certificate. If you have not looked at that corner recently, nobody is going to make you. Here is what happens if you miss it. Renewal costs $26 per year. Renew within 30 days of expiration, and it costs $31. On day 31, the renewal option disappears. The certificate is expired, reinstatement is required, and reinstatement costs $84 with a processing queue that runs 8 to 16 weeks. $26 becomes $84 because of a single day. On a deadline, nobody mails you anymore. Now, I want to be straight with you about something, because this is the point where a channel reaches for a scary number. There is no number. No federal agency counts vessel title fraud. The FBI's Internet Crime Complaint Center tracks real estate fraud as a broad category and does not break out title theft. The National Insurance Crime Bureau published its recreational vehicle theft analysis on the 3rd of August, 2026, covering 58,957 vehicles stolen in 2025, down 20%, with roughly 63% never recovered. It publishes standalone figures for motorcycles, 44,564 stolen, with 41% recovered, and for all-terrain vehicles, 11,050 stolen, with 23% recovered. For boats, it publishes nothing. Watercraft are folded into the combined total. So I am not going to tell you how common this is because nobody knows, and I am not going to invent it. What I can tell you is that the mechanisms are written into federal regulation and state law, and that they do not require a criminal to hurt you. A dissolved bank and an unread record are enough. The residential world does have data, and it points the same direction. Criminals target property owned free and clear, specifically because no lender is watching the title. Seniors filed 19% of real estate fraud complaints and absorbed $76.3 million, which is 44% of all money lost, because they are the ones most likely to own outright. Owning it outright is the condition, not the reward. There is one more cost attached to your name, and it survives the boat itself. In Oregon, the last titled owner is liable to the enforcement agency for all costs of seizing and removing a vessel. California treats abandonment as an infraction carrying $1,000 to $3,000 plus the actual removal costs. South Carolina signed a law on the 8th of May 2025 with fines up to $10,000, up to 60 days, and full liability for removal and disposal, and it gave anyone who removes a derelict vessel 3 years to sue the responsible owner. If your name is the last one on that record, the bill fines you. It does not matter that you gave the boat away. So, here are the 4 filings. Order the abstract of title. It comes back in 2 to 3 business days, and it is the only document that shows whether your lien was ever satisfied. If a mortgage still appears, chase the satisfaction. Start with the lender, move to the successor institution, and go to the FDIC if the bank failed, with a title report and your proof of payoff. Put your own expiration date on your own calendar. $26 a year, and a recreational certificate can be renewed 1 to 5 years at a time. There is no letter coming. Read what your name still costs you. Find out what your state charges the last titled owner before you hand that boat to somebody who cannot afford to keep it floating. None of that is difficult. All of it takes an afternoon. The thing worth carrying out of her story is smaller and stranger than fraud. A record is not a fact. It is a claim somebody entered that somebody else is supposed to go back and check. For years, the bank did the checking because, until the debt cleared, the boat was partly theirs. The moment she paid, the checking stopped, and nobody sent a letter to tell her. The record did not become wrong that day. It just became unread. Once you notice that, you start seeing how much of your life sits in files that no one is paid to open. That is the work Yachts and Boats does. Subscribe so you catch the next one.